Alphabet Q4 Earnings Overview. Earnings and Revenue, EPS. Alphabet's earnings for Q4 came in at $2.15 per share, a 31% year-over-year increase, which was slightly ahead of analysts' expectations of $2.13. Revenue. The company reported $96.46 billion in revenue, which was a 12% increase compared to the same quarter last year. However, it was slightly below the expected $96.7 billion, due to challenges like currency exchange rates and a strong US dollar. Revenue breakdown. 1. Internet search advertising. This segment, which remains Alphabet's core business, reported $54 billion in Q4 revenue, reflecting a 12% year-over-year growth. It surpassed analysts' expectations of $53.3 billion, highlighting the strength of Google's advertising business, despite growing competition from AI-powered platforms like OpenAI's ChatGPT. For 2025, analysts project growth of nearly 10%, with search advertising revenue reaching $216.5 billion. 2. Cloud revenue. Alphabet's cloud computing segment saw a 30% growth, reaching $11.95 billion in Q4. However, this was below the $12.19 billion analysts had expected. Google Cloud continues to be a key growth area, but the miss indicates that it faces stiff competition from established players like Amazon Web Services, AWS, and Microsoft Azure, especially as more companies turn to AI-driven solutions for their cloud infrastructure needs. 3. YouTube ad revenue. YouTube's advertising revenue grew by 14%, reaching $10.47 billion. This was also above expectations of $10.23 billion, which demonstrates YouTube's continuing importance in Google's advertising strategy. Capital expenditure, CapEx, outlook. CapEx for 2025, Alphabet forecasted capital expenditures of $75 billion for 2025, representing an increase of 43% over the previous year. This was significantly higher than Wall Street's expectations of $59 billion. The primary driver of this increase is the company's continued investment in AI and cloud infrastructure, areas that are increasingly central to Alphabet's strategy. However, this forecast raised concerns among investors about the sustainability of such heavy investments, especially as Alphabet is already facing increased competition from startups like DeepSeek, which has been growing in the AI space. Analyst reaction. RBC Capital's analyst, Brad Erickson, noted that AI spending was the key culprit behind the higher-than-expected CapEx forecast, and it was a major reason for Alphabet's stock sell-off after hours. Stock performance and technical ratings. Stock performance. Despite the strong earnings report, Alphabet's stock tumbled over 6% in after-hours trading, closing at $193.20. This decline was largely attributed to the unexpectedly high CapEx forecast and concerns over the growing competition in the AI space. Technical rating. On a positive note, Alphabet holds an IBD composite rating of 99 out of 99, indicating strong fundamental and technical strength. This rating is a blend of key metrics that investors use to gauge a stock's potential for growth. A rating of 90 or better is generally considered a sign of a top-performing stock. Other financial metrics. Stock repurchases. Alphabet repurchased $15.55 billion of its stock in Q4, signaling confidence in its long-term prospects and its ability to return capital to shareholders. Analysts' predictions. Despite the mixed earnings results, analysts expect the company's core advertising business to continue growing. The projected search advertising revenue growth in 2025, though lower than 2024, suggests that Google will likely remain dominant in the digital ad market for the foreseeable future. Market context. Alphabet's earnings come amid a broader AI-driven arms race in the tech industry, with companies like OpenAI and DeepSeek emerging as new competitors. Alphabet has responded by ramping up its AI investments, which are likely contributing to its increased capital expenditures. The rise of AI in cloud computing has led to higher capital spending across the tech sector. Alphabet's aggressive investments in both fields are aimed at solidifying its position as a leader in these areas but are also raising questions about the effectiveness and return on investment in such a competitive market. Conclusion. Alphabet's Q4 performance showed solid revenue growth in its core advertising business but highlighted some challenges in its cloud segment. The company's hefty capital expenditure forecast for 2025, driven by AI investments, raised concerns among investors, leading to a sharp post-earnings sell-off. Despite this, Alphabet remains a dominant player in the tech space, with strong technical ratings and a continued focus on growth areas like AI and cloud computing. The company's future performance will depend on how effectively it can manage its increased spending while continuing to lead in its core businesses.